All right, today we're going to build a financial machine right from scratch. We're taking apart one of the most incredible transformations in modern corporate finance, how a software company, MicroStrategy, morphed into Strategy Inc., a crypto reactor built for one single purpose, to stack as much Bitcoin as possible. We're going to see exactly how they built a whole new class of credit instruments on top of a digital asset.
You know, it all kicked off with a really basic problem. Back in 2020, the company's treasury was just a melting ice cube. Their cash, what Michael Saylor calls analog money, was just losing its purchasing power to inflation day after day. So the solution he came up with wasn't just to buy a new asset, it was to rebuild the entire company's foundation on that new asset.
And wow, did they move fast. It all started with that first big splash in August 2020, $250 million into Bitcoin. Fast forward to 2024, and they're calling themselves the world's first Bitcoin development company. And then, just a year later, the rebrand to Strategy Inc. made it official. The old company was gone, the transformation was complete.
So here's our game plan for today. We'll start with their totally new take on a corporate treasury. Then we'll get into the bedrock of it all, this idea of digital capital. After that, we'll actually build the reactor, piece by piece, decode their unique credit products, and then see how this BTC Yield flywheel actually spins. And finally, we'll have to ask the big question. Is this pure genius or a disaster waiting to happen?
Okay, first up, a radical new treasury. You know, this wasn't just about making a small investment on the side. The company basically split itself in two. It kept one foot in its original software business, sure, but it planted a much bigger foot deep into the world of digital assets.
This slide just lays it out perfectly, the before and after. On the left, you've got the old MicroStrategy, a typical software company watching its cash get eaten alive by inflation. And on the right, the new model, a machine designed to suck in capital from the markets and convert it into a digital asset. The software business is still chugging along, but now it's basically just one of the fuel sources for the main reactor.
Now, let's talk about the foundation of this entire building, digital capital. See, for Strategy, Bitcoin isn't just some speculative trade. They see it as a fundamentally better form of capital for a company to hold. It's an asset with a fixed supply, hard-coded, that's totally immune to the very inflation that made holding cash such a headache. It's the bedrock that everything else is built on top of.
And this image, well, it says it all, doesn't it? The rebrand to Strategy, putting the Bitcoin symbol right smack in the middle of their logo, was a clear, loud signal to Wall Street. Hey, our main business now? It's Bitcoin.
All right, now for the fun part. Let's pop the hood on this financial engine. We're going to put together their capital stack, layer by layer, so you can see exactly how they turn traditional Wall Street capital into digital capital on their balance sheet.
So the foundation, the very base of this whole thing is super simple. It's just unencumbered, outright owned Bitcoin sitting on the balance sheet. This is the core asset. Everything else, every other layer we're about to add, is built on top of and refers back to this.
Okay, the next layer up is the common stock, ticker MSTR. Now, for investors, this stock has basically become a leveraged way to play Bitcoin. Its value isn't really tied to the software business anymore, it's almost completely driven by the size and market value of the Bitcoin treasure chest sitting underneath it.
And here, in Layer 3, is where the really slick financial engineering kicks in, convertible debt. This move is just brilliant. By selling these notes with super low or even zero interest payments, Strategy can raise billions of dollars in cheap, long-term capital. It's high-octane fuel for the Bitcoin engine, but with almost no drag from interest expenses.
And that brings us to the most innovative part of the reactor, especially if you're a credit or a fixed-income investor. You can see it in the table here. They've literally created a whole family of preferred stocks. They call it their digital credit stack. And each one, from STRF all the way down to STRC, is engineered for a specific investor, with a different yield, a different seniority, a different risk profile. This is how you create fixed income-like products from a volatile asset.
So let's zoom in and really decode these engine components. Because each one of these preferred stocks is designed to do a very specific job. It's all about attracting different kinds of money from different investors who are looking for different things.
First up is STRF, or STRF. Think of this as the most conservative bond-like security in the whole stack. It's senior, it's not convertible, and it pays a juicy 10% fixed coupon with big penalties if they miss a payment. This is built for traditional income investors who want a solid yield but don't want to ride the Bitcoin price roller coaster.
Next up, STRK, or Strike. This one's the hybrid. It pays a really nice 8% dividend, but it also has a secret weapon.
It's convertible into the main MSTR stock. So you get the steady income, but you also get a lottery ticket, a call option on the company's future growth. It's for investors who want a bit of both worlds.
Then we've got STRD. This is the pure high-yield play. It's got the highest coupon of the bunch, but it comes with more risk. It's lower on the totem pole, and, this is key, the dividends are non-cumulative. That means if the company has a bad quarter and skips a payment, you don't get it back. Ever. This one's for the classic yield chaser who's willing to take that extra risk for the extra reward.
And finally, we have STRC, or Stretch, which might just be the cleverest of them all. It's engineered to act like a corporate money market fund. Its price stays stable, but it kicks off a high-yield monthly dividend. This lets them tap into these massive pools of institutional cash that are just looking for a safe place to park money and earn a good yield. And of course, every dollar they raise goes straight into buying more Bitcoin.
So, you've got this amazing, diverse capital stack. But how does it all come together? Well, the answer is what the company calls the BTC Yield Flywheel. This is the engine that drives the whole thing, creating this powerful, self-reinforcing loop of Bitcoin accumulation.
And it's actually a pretty simple four-step process. Step 1, they sell their stock when it's trading at a premium to the actual value of their Bitcoin. Step 2, they take that cash and immediately buy more Bitcoin. Step 3, and this is the magic part, because they bought that Bitcoin using overpriced stock, the amount of Bitcoin per share actually goes up. They call this BTC Yield. It means the whole process actually creates value for the existing shareholders. And that brings us to step 4. This growth helps justify the stock's premium, which lets them start the cycle all over again.
And look, this isn't just some theory on a whiteboard. As of the middle of 2025, the company reported that this flywheel had increased their Bitcoin per share by a whopping 25%, and that was just year to date. It's a real, tangible result of all this financial engineering at work.
Which, of course, brings us to the ultimate question. Is what we're looking at a game-changing innovation in corporate finance? A new playbook for every company out there? Or is it just an incredibly complicated, super-leveraged house of cards that's bound to come crashing down?
I mean, the bull case is pretty compelling. The argument is that they've created this brilliant fiat to Bitcoin carry trade. You borrow cheap, depreciating dollars to buy an appreciating asset. And they built products for literally every kind of investor. But the bear case, well, it's just as powerful. The whole thing is balanced on the price of Bitcoin. A long, nasty bear market could be absolutely catastrophic for this much leverage. And critics will tell you that fancy metrics like BTC Yield are just a way to distract from the very real financial risks.
So that's what we're left with. Is Strategy Inc. showing us the future of the corporate treasury, or have they just built a beautiful, high-stakes machine that's destined to face a brutal test of its own making? I guess only the market knows the answer, and we're all going to be watching to find out.